Laurentian Bank of Canada saw a rise in profit in its latest quarter. Let's get more from Éric Provost, President and CEO. Éric, thank you very much indeed for joining us.
Good morning, Andy.
Give us the most important one thing about the quarter, if you would. I know there's an awful lot of moving parts, but the most important one thing.
Well, I think that the biggest thing here is that we're in line executing our strategic plan. The one we unveiled just over a year ago is moving forward. We intended to specialize ourselves even further in the commercial sectors, and this is what we've done over the last year. We grew 6% our commercial loan book, and we intend to continue and accelerate on that front.
Are you pulling back, or are you putting less emphasis on retail banking then?
Not less emphasis, but definitely a shift towards where we believe we can enhance profitability for our institution, and having those specialized niche are definitely the path forward for this bank.
You certainly had a beat here. According to Jefferies, they're saying adjusted EPS of 78 cents and consensus was at 72 cents. However, there were some releases in performing loans, and I think that was, you reversed some provisions you'd previously taken because some loans you had questions about?
Yeah, actually, that reversal is actually a good sign of resiliency of our portfolio, and also of our approach towards underwriting, education, like the overall credit aspect. And I think that shows for, again, a strength in our understanding of the business mix and the good positioning for future state in terms of the overall portfolio, even though we know that there's still a lot of uncertainties out there from a macroeconomic standpoint.
So looking at your non-interest revenue, now, again, according to Jefferies, you had posted 2 straight quarters of decline in non-interest revenues. It edged up quarter on quarter, about 1%, but was still down 20% from a year ago. What is behind that decline?
Well, the 20%, there's a mix in there. We divested some of our activities, as you recall, last year in terms of the broker retail activities. So that counts for a portion. Our lending fees decline, but that's because we shifted, again, business mix towards industries where we generate maybe less fees, but they're a bigger contribution on our net interest margin. So you see an increase there year over year of 3 bips. And into our strategic plan, we aim towards getting closer to a 2% NIM over time. So right now we're standing at 182, a slight decrease quarter over quarter, but still aligned to continue that shift and increase that portion of contribution for the bank.
Your dividend yield about 6%, which is roughly twice the yield on Royal Bank of Canada. Now, I know it's apples and oranges. They're a lot bigger than you, for example. But what is your plan with the dividend? Do you plan to steadily increase it over time?
Well, some could say that we trade low versus book value, and then this is why the percentage seems so high. But we feel good where we are with the dividend in terms of this is an activity that is reviewed quarter over quarter, and we feel that we're rightly positioned versus versus the dividend yield right now. So.
Oh, I beg your pardon. Sorry, but what is your policy overall? Do you like to increase it each year?
Well, actually, right now, the guidance is to maintain a range of payout ratio between 40 and 50%, and we're above 60. So on our positioning, we feel we're at the right level. But this is an activity, as I said, that is reviewed quarterly. Sure. So we decided this quarter to maintain the dividend as it is.
You're still not catching much love on Bay Street, according to my Bloomberg screen. According to Bloomberg, there are no buys, there are 5 holds and 4 sells. Why do you think the analysts haven't warmed up to you?
Well, I think we're still early in the strategic plan. Like I said, we unveiled last year in May. So just above a year. We indicated heavy investments into our foundational technology stack. We're moving a lot of platforms towards more cloud-based technology to be adapted for future state, create efficiency. So for us, we believe that that execution and after that, the results in terms of reducing our efficiency ratio, so being a more profitable organization, will lead the market towards being more positive towards our stock.
And just remind us, would you, what % of your business would be in Quebec?
Well, again, it depends on the sectors you're talking about. So if you think about retail, our branch activities are solely in Quebec, but we do originate from brokers, mortgages and deposits across the country. In terms of our commercial book of business, our commercial real estate activities goes from coast to coast, and we have almost $10 billion of book of business there. And on the inventory and equipment finance side, we service over 6,500 dealers in North America. So I would say that into our specialized group, like we have either a full Canadian footprint or even a North American approach.
Right, but you don't have branches outside Quebec, because I mean I could see that that's going to be an incremental cost that might be hard to justify, opening branches.
Well, again, it's all about efficiencies, and for us, the branches are a segment we cover here in Quebec, but there's no intention of opening branches outside of the province.
Éric, thank you very much for giving us the time today.
Thank you, Andy, for having me.
Éric Provost, President and CEO at Laurentian